Hey everybody, Chris Bober here with Team Bober at Nebraska Realty, and we're coming back to you with my buddy Nick Zwiebel here. Hi, Nick.
Hey Chris, how's it going?
Oh, going great, man. I tell you what, a lot of changes going on out there that we're just trying to stay in front of. Can't say that we have all the answers, but we're going to try to share as much information as we can with you guys out there. So I'm going to let Nick take us away here, and what we're going to talk about today is we're going to talk about how the CARES Act affects real estate, has affected real estate, and a couple of things that kind of came out of it. And the big word we're using today is called forbearance. And Nick's going to define it, but basically forbearance means that they're going to give you some ability to make your payments later, defer payments, put a pause in your payments. There's a lot of different specifics about it, which Nick will cover. But I've heard that term thrown around a lot, and I don't like it because there's a lot of misinformation. So we're trying to give you some facts today that you can use to see where you are. So Nick, go ahead and tell us what you got.
All right, thanks Chris. Just going to share my screen here. So yeah, today, as Chris said, we're talking about mortgage forbearance, and mainly starting out to talk about the CARES Act, the Coronavirus Aid, Relief, and Economic Securities Act, signed into the law by the President March 27th of 2020. It's a bill to help provide economic relief. The government is providing funding to support small, large businesses, individuals, families, independent contractors, hospitals, healthcare providers. And two main protections out of the CARES Act for homeowners with federally backed mortgages came out. One of them that we're going to talk about a little bit or touch on is delaying foreclosure proceedings, and then also allowing individuals affected by COVID-19 to request forbearance from their servicer or lender to just help them kind of bridge the gap if they have lost income or lost their job due to the COVID-19 pandemic. So going into the two main homeowner protections of the CARES Act, the first one is foreclosure proceedings are delayed for 60 days starting on March 18th, 2020. So any foreclosure proceedings that were started before that were supposed to close after March 18th, and then for the next 60 days through basically May 18th, are just going to be stopped right now. And anyone that hasn't been making their payments and foreclosure proceedings may have been started by their servicer or lender here in March, April, or May are just going to be paused until after 60 days. So right now, no one can be foreclosed on. And then the second one that we're going to go over quite a bit, just as Chris said, there's a lot of misinformation out there in regards to forbearance. Forbearance, if you experience financial hardship due to the coronavirus pandemic, you have the right to request a forbearance up to 180 days. And then after 180 days, if you're still in a financial hardship or situation where you can't make your payments, you can request an additional extension for up to 180 additional days for a total of basically 12 months of pausing your mortgage payments. During this time frame, the lender cannot charge any late fees, penalties, additional interest, or anything like that. It's just the normal interest that would have accrued during your monthly mortgage payment. You don't have to submit any documentation to prove that you have suffered a financial hardship due to the Corona-19 pandemic. So that's one thing I really touch on, Chris, is that homeowners, anyone can really request this, whether or not they've lost their job or have had reduced income, reduced hours. So almost available for anyone that applies for it.
Yeah, you don't really have to prove anything. And the way they've done it is a protective measure, sounds like, is that if you just call your bank and tell them you've had a hardship, you don't have to prove it. By law, they have to give you this forbearance. And that's great, especially for people that need it. And that's what it's meant for. But let's talk about like some of the fallout from getting forbearance and what it looks like.
Yeah, definitely. One of the next slides, just want to go over just making sure that you understand that forbearance is not forgiveness. So if you request forbearance, those payments are essentially just paused. And so if you request it for 6 months, they all can come due in that 7th month, meaning that it's not added to the end of the loan like a lot of stuff I'm seeing out there online, or that they're just basically forgiven and you're just going to start your normal monthly payment again in month 7 or in month 13 if you apply for an additional 6 months. A lot of times what will happen is the bank, lender, or servicer is going to say in the 7th month, all those payments are going to come due. So for example, just easy numbers, if you currently have to pay $1,000 a month on your mortgage, you pause it for 6 months, and that 7th month, all 6 months that were deferred or in forbearance, all come due in that 7th month, plus your normal monthly mortgage payment of $1,000. So essentially in the 7th month, the lender or servicer may require $7,000 due. And if you're an individual that is not able to come up with that money in month 7, you may do like a workout agreement or workout plan to meet the servicer. Just for example purposes only, every lender and servicer may have a different option. They may divide those payments out over the next 12 months of what was deferred. So if you had $6,000 due, may they divide it over the next 12 months, so it comes out to $500 a month, plus your normal monthly mortgage payment of $1,000 a month. So you're paying $1,500 a month for the next 12 months. And again, every bank, lender, servicer may have different workout options. And this is just for example purposes only. A few of the lenders I work with, this is exactly what they're stating right now today that they're going to do as new legislation comes out and how everything kind of shakes out over the next few months. These options may change and they may be available, may not be available, or something completely new may come out, just depending if there's any new legislation that comes out from the government.
Yeah, and to be clear, this is what is an option. Like I've seen some stuff out there that says you will not have to pay a lump sum at the end of the deal. And that might be right, especially for government-backed loans. Probably, with shutting people down and giving this out, it's hard to expect them to make that lump sum payment. I've heard some different things out there. You're going to maybe have some loan modification options, maybe some added to the back of the loan, you said like that. But all of these are going to come at a cost. We know this, right? Like this isn't something they're just going to let you walk away from not paying your mortgage. And the biggest thing is that the mortgage servicers are still having to pay the investors, right? So they're backed up by Ginnie and Freddie and Fannie and them and private investors, and they're sold as mortgage-backed securities. Well, the note on those is still due every month. So the servicers still have to pay those. Now, we think the government's giving them some sort of a little bit of forgiveness, but they did not get a bailout. The mortgage companies did not get bailed out of this CARES Act or the recent one. So at some point, this money becomes due. And that's the thing to remember, is that at some point, you're going to have to repay this money, whether it's at the end of your loan, whether it's remodifying and re-amortizing or requalifying for your mortgage. It just, there's more to this. And I'm a little nervous about them giving this out and allowing it or making people do it without really knowing what the cost is. And that's the thing. Banks and mortgage companies are in business to make money, and they're not making money if you're not making your payments. So at some point there will be a cost to this. What do you think, Nick?
No, I think you're absolutely correct, Chris. I think one has a different situation. And again, definitely if you are in a situation where you can't make your payments, contact your bank, your lender, servicer right away. That's what it's there for. If you're at home working or still making the same wages that you were before, same earnings, just kind of pause and think twice about applying for forbearance. It may not be something that you would want to do or put yourself into a financial, stress or maybe a pain 7, 13 months down the road. So just make sure that if you truly need it, contact your servicer right away. But if you're still earning the same wages, make sure, to think twice about actually filing for forbearance. Because as Chris said, they're definitely in to make money. And so there's going to be a cost to everyone that files. And then also in turn, that's a lot of the reasons why we're seeing a lot of different guidelines, overlays come out, making it a little bit higher credit scores, lower debt to income ratios, because as Chris said, the servicers are still on the hook to make those payments while their borrowers are in forbearance. So it just kind of stresses some of the lenders and could potentially cause a little bit of a liquidity issue. So lenders right now are scrambling, trying to figure out what they want to do and how much risk they want to take on during this pandemic, not only today, but for the next 6, 12 months, while some of their borrowers may be filing for forbearance.
Yeah, so I guess the bottom line here is do your homework, right? Call an expert. Nick's definitely one of those people out there. If you currently hold a mortgage, obviously call your servicer, call that is. There are options out there, which is a good. It's good that we have options, but they're all options are not equal. So call an expert. We are here to try to, we're trying to just empower you and educate you so that our customers and our clients can make great real estate decisions. And these are tough times. I know we're gonna have some tough times coming up, but we're here to help. We're here to provide information. Do your homework. That's the biggest deal. And the deal is, if you can make your payment, keep making your payment. The American dream of home ownership is still alive, and don't give that up just to maybe keep a little bit extra of your money. You know what I mean? Because that does come due, and the people who can continue to make their payments they're going to see more benefits down the road than those who have to go through maybe a forbearance or modification or repayments. That's going to be tough. So we're here to help no matter what. You see Nick's information. I'll definitely share his stuff, and keep following us on social media, on Facebook, YouTube, LinkedIn, Twitter, Instagram. We're on all of them, and we're just going to try to keep providing information. I know Nick and I are working together to get people into houses as we speak. So we're here for you guys. We're here for you. Just come call us when you need our help. And thanks a lot, Nick. I appreciate it. Nick's
Thank
working
you,
from
Chris.
home. I got the chance to actually come in the office, which is awesome. But we are still working full time, and we are ready for help you out. So Nick, thank you much, buddy. And we'll see you next time. Okay.
All right. See you guys. Thanks.